Yeah, Netflix has been a great story. I think part of the worry why you saw a correction early last year was, the narrative sort of shifted to be that that their subs here in the U.S. might be saturated, and that's where they make the majority of their money, or at least profitability, and then they take that and reinvest it internationally. The international story, they don't make much money internationally, but that's where at least where investors are hoping the growth will come from. So I think the stock has recovered because they're more comfortable with sub-growth expectations here in the U.S., and they're getting more comfortable with the competition that's come to market.
Paul, and if you look at the likes of an Amazon that has just also had an extraordinary run in 2019, if you like the e-commerce story because you like the U.S. consumer story, which you do, but you don't quite want to get into Amazon, maybe you think it's too expensive, what else would you look to? I understand you're looking at some smaller plays that take advantage of this story.
Yeah, so the preeminent e-commerce play that we own is Shopify, and it's a little bit different than Amazon. Amazon is more of a marketplace where you can go and sell things to consumers at large, and Amazon gives you a great way to do that. Shopify is a little bit more nuanced in the fact that they do your entire e-commerce platform, and when I say that, I'm talking about they can do your website, they can do your inventory management, they can take payments, they can do all sorts of things that help small businesses grow fast, and they can also help you with marketing and spending in the right ways, whether that's on Instagram, Amazon, or Google. So if you're really bullish on the e-commerce side of things, Shopify is a great company, and it's been growing quite rapidly.
Okay. Paul, I also wonder, just looking through some of your picks, if part of your strategy is to look at more of the domestic-oriented companies, are you concerned that perhaps those that are exposed to the China-U.S. trade story could see more volatility in 2020, even if we get this phase one deal signing as we expect Jan 15th?
Yeah, I mean, I would be a little bit, well, with the deal being consummated later this month, I think that should turn down the temperature on the rhetoric between the two countries, which would be positive for sentiment. A lot of the domestic companies that we own don't really have much, China exposure. They get hurt more when sentiment changes, and it has little or nothing to do with their underlying earnings base. So I think, obviously getting an agreement with China is very helpful, and hopefully they can get stage 2 negotiating going. But most of the companies we own here in the U.S. don't have very little impact with the China-U.S. negotiation.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.